Warren Buffett, the Oracle of Omaha, has built one of the most successful investment empires in history, Berkshire Hathaway. With a market cap exceeding $800 billion, this conglomerate owns some of the biggest brands in the world. But what are Buffett's greatest investments? How did he turn small stakes into billion-dollar holdings? In this deep dive, we will explore the best investments Warren Buffett has made, the principles behind his strategy, and the lessons we can learn as investors. If you enjoy detailed stock analysis, make sure to like this video and subscribe for more deep dives into the world of investing. Before we break down Buffett's best investments, let's first understand what Berkshire Hathaway is. Brief history. Originally a failing textile business, Buffett acquired it in 1965 and transformed it into an investment powerhouse. A conglomerate that owns entire companies like Geico, BNSF Railway, and Dairy Queen. It also holds massive stakes in publicly traded companies and uses insurance float to invest, essentially a form of leverage. Buffett started buying Coca-Cola stock in 1988 following the 1987 market crash. Initial investment was around $1.3 billion. Today, Berkshire owns 9.3% of Coca-Cola, worth over $24 billion. Why did Buffett invest in Coca-Cola? A strong brand with global dominance, predictable cash flows and high margins, consistent dividend growth. Buffett now earns $750 million per year in dividends from Coke. What is the lesson for investors? Invest in businesses with strong brand loyalty. Look for companies that can consistently grow dividends. Buffett started buying Apple stock in 2016, a surprising move since he had avoided tech stocks for decades. Initial investment was around $36 billion. Today, Apple is Berkshire's largest holding, worth over $160 billion. Why did Buffett invest in Apple? Apple isn't just a tech company, it's a consumer brand with loyal customers, massive cash flows and strong margins, share buybacks increasing Buffett's ownership over time. What is the lesson here for investors? Even legendary investors evolve. Buffett overcame his skepticism of tech stocks. Focus on companies that dominate their industries and have pricing power. American Express. Buffett first invested in American Express in 1964 when it was in trouble due to the salad oil scandal. Bought a 5% stake for $20 million. Today, Berkshire owns 20% of American Express, worth over $30 billion. Why did Buffett invest? American Express had strong customer loyalty and a premium brand. High barriers to entry in the credit card and financial services industry. Revenue from transaction fees and lending provided steady income. What is the lesson here for investors? Crisis creates opportunities. Buffett bought when others were fearful. Invest in companies with strong moats and pricing power. Buffett invested in Bank of America in 2011 when it was struggling post-2008 financial crisis. Bought preferred shares and warrants, later converting them into a 12% ownership stake. Why did Buffett invest? Bank of America had strong market positioning despite short-term struggles. Banking is a cyclical but profitable industry when managed well. Bank of America's low-cost deposits provided a competitive edge. Again, what is the lesson for investor here? Crisis investing. Buffett bought a strong bank when it was cheap. Look for financial institutions with strong balance sheets. BNSF Railways. In 2009, Buffett bought BNSF Railway for $44 billion, one of his largest purchases. Why did Buffett invest in it? Railroads are essential, obviously, to the US economy. High barriers to entry in this market. steady cash flow and pricing power. Lessons for investors: look for businesses with durable competitive advantages. Infrastructure investments can provide stable, long-term returns. Chevron. Berkshire owns $20 billion in Chevron and 30% stake in Occidental Petroleum. Why did Buffett invest? Energy companies benefit from rising oil prices. They have strong free cash flow and dividend payments. Occidental's CEO was aligned with Buffett's investment philosophy. What is the lesson here for investors? Cyclical industries can be great investments if bought at the right time. Energy companies can generate high returns when managed well. Buffett's best investments share common themes. Strong brands with loyal customers: Coca-Cola, Apple, American Express. Companies with pricing power: Apple, BNSF, Bank of America. Buying in times of crisis: Bank of America, American Express, Occidental. And long-term holding strategy: Buffett rarely sells. What is the lesson here for investors? Buy great companies at a fair price rather than fair companies at a great price. Be patient. Hold investments for decades. Focus on businesses, not stock prices. Buffett's best investments weren't random. They followed a disciplined strategy. His ability to identify strong businesses, buy during downturns, and hold long-term is why Berkshire Hathaway is one of the most successful companies in history. What do you think of Buffett's best investments? Let me know in the comments. If you enjoyed this video, give it a thumbs up and subscribe for more stock analysis. Thank you.